Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, March the 27th. The year's 2022. Let's talk trading. It's time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. I want to talk about something before we actually get into the weeklies. Open and gap. I read something about teaching, and basically it had a picture of a circle and then another circle, surrounding the first circle. Think of almost like a donut. And the distance between, say, the edge of the donut hole to the edge of the donut, that's kind of the gap. And the student is right there at the donut hole edge, and the teacher is at the edge of the donut. And so there's this big gap. And what happens is that a lot of times the teachers forget that the students don't know what they know, and they make all kinds of assumptions. So I've been thinking about that. I've been pondering that all day, thinking about tonight's video and, in fact, this week's video. Because there's just certain things that I think are self-explanatory or obvious that really, to many, it's not. Like this first screen here, to me, it's obvious what my email address is and where you can find me on Facebook. But every now and then I get a question about how to reach me. And to me, it's like, it's just so obvious. But, if the student's not focused on the whole screen, doesn't take the time to look at everything on the screen, I guess it's easily missed. It's like some people, wonders like, well, what's this video about? Well, it's about the weekly open and gap. The weekly open price, the first price when the week opens, and the gap, the distance between today's opening price and the Friday's close price. To me, I've been thinking about this for literally over a decade, and to me it's just so obvious, but to some it's not. So I guess what I'm saying is I'm going to need to take the time to explain things, make sure that I don't leave anybody behind. And of course, you can always ask questions because, this is a candle chart, and, there's the closing price, there's the opening price, and the tip of that little vertical line, that's the upper wick. The top of that's the high price. Bottom here's the low price. To most of it, it's so obvious. But to the person who's just starting out, it's not. So we can see here we're, 154 pips off the monthly low, 284 off the high, and we're 236 below the monthly open. And this is the last trading week of the month of March. So we look at this chart, we'll have to see. We haven't hit that monthly pivot. Will it turn around this month? We're just going to have to wait and see. The week, all but one gap is filled, and you can see here this open is higher than the close, so it gapped up, hence the green fill versus the red fill. It gapped down, and you can see price has just been heading steadily down. In fact, we are 33 pips below the weekly open right now. And we're putting in the opening range for the week right now, but you can see we're well below the opening range for the month and even further below the opening range for the year. And if you're using the latest version of the dollar TO time indicator. It's saying the pound typically forms a bottom in early to late March and then move higher into the end of April. So if that's true, that's going to hold true this year. Price should go up. Now, if we look last year, let's see, let's find April. There's March. And there's April. And it did move a little bit higher. It moved almost to the top and then got pushed back down. So let's just see. Will history repeat itself? We're just going to have to wait and see. For the year, we're 374 pips below the yearly open. We're 153 pips off the yearly low. 596 off the yearly high. And if we look left, we can see we're kind of hitting some bottoms there. So let's see, it looks like we need to clear about 34, $1.34 for it to really go back up. So we'll just have to wait and see what happens. Inside bar happened 6 days ago. We're once again inside that inside bar. Long trigger 31.96 and the short trigger 31.10. And you can see right here we have crossed below a couple of these lows. So there's the Friday low, the Thursday low, and there's the Wednesday low. So we've already broken through 3 lows. There's 2 more here. We'll see what happens. As far as inside bar action, there is a handful. There's only a couple on the weekly, and we've got a little bit more action on the monthly for the inside bar traders. Three pairs over 100 at this time of day, that's not usual, but they're all yen pairs. And I guess because I think something's going on with the cryptos. Last time I looked, Bitcoin went over 47,000. Ethereum, I think, was over 3,300. So there's definitely been some movement, and I guess it's affecting the yen for some reason. Not sure why. As far as the buy zone, hit the short zone and just continued down today. And we're 7 hours plus into the trading day. Range is too low for rats, but if anything, green rats, get ready. Price near the pivot bias is short. You can see we opened near the pivot and it just fell down. We're now at S1. Bias is long. You can see here the past 1, 2, 3, 4 hours have all dipped below S1, but none of those hours has closed above. I'm sorry, has closed below S1. They've all closed above, but you can see we are making lower closes. We're making lower highs, but we're making higher lows. It's a squeeze. So the previous hour was an inside bar, and this hour still has about 42 minutes left in it. So anything could happen, but if it doesn't make any much movement here, looks like we're going to have 2 inside bars in a row on the hourly. Pivot, we haven't hit today's pivot. We barely missed taking out Thursday's pivot on Friday. Missed by a pip. As far as the weekly, we're 48 pips below the weekly pivot. Monthly, 292 below. Maybe next month we'll take out the March monthly pivot. Let's wait and see. Because that's all we can do, right? Wick zone. Not much of a candle body there on the daily. We take a look back here. You can see it pretty much a doji. So in and out of the upper and lower wick zone, both to the downside here. But we did go up out of the lower wick zone, but only to return and come back down. So 31.58, call that the short trigger. As far as the range we saw last week's weekly range was only 179 and a 33 percentile out of the last 12 weeks. So nothing to write home about. Maybe this week we'll be in the hundreds. Maybe it'll be over 200. We'll just have to wait and see. So far, we haven't broke out of the previous week's candle, either the low or the high. So we'll just wait and see what happens there. As far as the wall mall price action, once again, this time of day is not conducive for wall mall trading. Even though we did have, 2, 3, 4 hours ago, we did have some nice movement. Even the last hour, it's like you could have paid off a couple of pips to the south side, but not much. And you can see it's pretty much been making lower highs and lower lows until now. We'll have to wait and see what this hour does. The lower high, higher low using the with the 3-level ZZ, you see we had a 3, 2, 2 coming across this 2-ball support, and you can see price came up through that 5-minute lower high there. Right now 4.8 pips above it. And so when you see how these lows were put in here, it didn't make a new lower low. So then when it came back up, there was an opportunity to either go long here or go long here. And one of the things about these trades, we've been talking about trading better, is you have to take your signals, because you don't know what that signals, if it's going to be a winner or loser. So if this is your method, you're going to go with the horizontal lines. When price crosses it, you just have to take that trade. And sometimes you're going to win and sometimes you're going to lose. That's why we have stop losses, because if we knew for sure what was going to happen, we would own the market and the market would cease to exist. But that's not happening. And so you can see here we've got previous days shaded. We can see we're in and out of the wick zones. We're in the lower rat zone right now. Below the EMA 5, which is indicator 2. 33% of the ATR. Now 32. The low was put in at 45%, which is usually we look for 50 then for reversals, but with 3-ball, sometimes you just have to, once again, trade what you see. So, fellow traders, just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. Hope you had a fun, safe weekend. This is TheRumpledOne, over and out.